With the just concluded polls, the general expectations from the population and investors at large, I'm now joined by Ted Macharia from AIB Capital and Investment Analyst, just to shed some light on the ongoings about the industry. Welcome, Ted.
Thank you for having me.
Great. Now, we're going in, or rather, there's a petition which has just been filed by the losers of the concluded polls. What do you make of these polls in terms of the stock market expectations? Has there been any impact going forward?
I think the whole market is having one eye on the whole devolution process, the drama it brings and the opportunities, and on the other hand, on the petition process. From the devolution process, obviously, in terms of construction, we are seeing a lot of interest coming for real estate property, hotels, business class residential accommodation for people who will be involved in the whole process. But on the side of the petition, the biggest hurdle is the budgetary implications that it will have. Obviously, from the first round, we have seen how peaceful the process was. We have benefited a lot. The market has reacted very positively to the voting patterns and how peaceful the whole process was. So that would be the biggest issue, the budgetary implications.
Speaking now about the just concluded polls, insurance firms raked in quite some money out of political risk cover. What do you make of this?
Insurance firms have said they benefited very well from the panic buying of political risk cover, especially from banks and larger organizations that have operations not just in Nairobi but also in the other counties. We have seen basically the reinsurance firms benefiting the most, and the larger insurance firms that are not even listed getting most of the funds. For instance, Africa Trade Insurance has been getting a lot of premiums paid for political risk. In terms of the publicly listed companies, we know they had to work together to operate a fund for all the political risks they were going to adopt. We have seen peaceful process, no violence, no destruction of property. And we expect that since the cover, while it lasts for a longer period than most people think, it should last for maybe 1 or 2 years. Since nothing has happened on the one hand, then we expect their premiums collected will go up, and we've seen the market go up, we've seen interest rates stabilize, so we'll expect investment income to also go up.
Now, just taking you back into the investment, Kenya Investment Authority is predicting that we're going to have investment, basically foreign and local, up to a tune of 28 billion. If we go into a rerun, do you think this will be realized?
I think it will. The systems have already been put in place, and what the petition is against is the top seat. We've seen county governors already start haggling for offices and office space rents and cars. So in terms of the top, maybe we'll have some few problems, but the systems are being set in place, and we'll see a lot of local investors playing to that.
The central bank is expecting the base lending to increase, to go up by 2 percentage points following the completion of the elections. What do you make of this?
The inflationary pressures we are facing right now are very real, and they're very varied. We can start from fiscal stimulation. We expect government spending to increase, and we know government gets its sources of income from taxes and borrowings. So we'll expect them to increase taxes. They're already looking at ways they can increase taxes, from athletes to mobile transactions. So what that means is there will be, one, increased tax means increased cost of goods without a commensurate increase in income. Our incomes will not grow as fast. And two, there'll be a delay in that cycle, in that government spending will go in first before production starts. So it means there'll be some cost push inflation from that entire cycle in itself.
With all these pressures, where do you expect the economy to be in the next 6 months? The outlook going forward as we wrap up.
In the next 6 months, we expect, firstly, strong profits from the banking sector. We have seen them lag way behind the central bank rate. Average interest rates on loans is about 18%. The CBR is at 9%, so we'll expect strong profits within the next 6 months. That will be driving economies, smaller economies. We have seen increased credit borrowing from banking sector. I think the figures have gone up by about 60%. So that means even the smaller sides, agricultural, the the other economic pillars will also do well. So in 6 months, we expect one, strong performance from most sectors. We have stable macroeconomic climate and a stable forex. And two, we expect more borrowing and more growth, particularly in the agricultural sector, tourism, and construction.